Here is your tip of the day. Has an FHA loan become too expensive for first-time homebuyers? In this scenario, we'll compare an FHA loan versus a conventional loan for the pros and cons. Here, using an FHA loan based off of a $200,000 loan amount, you can see in the last 18 months, mortgage insurance has increased from 0.55% on a monthly basis all the way up to 1.15% as of April 18th this year. That's a $100 increase to any home buyer using an FHA loan in today's market. Also, an FHA loan has a 1% funding fee, so based off of a $200,000 loan amount, that would increase the loan amount by $2,000. Again, 1% of the $200,000 would increase the loan amount now to $202,000. Now we're going to compare a conventional loan down payment requirements. A conventional loan is at 5% and an FHA loan is at 3.5% as a down payment. Or one of the major advantages of a conventional loan currently is the monthly mortgage insurance. You're going to notice it's at 0.78% compared to an FHA loan that's at 1.15% for mortgage insurance, and also it has a funding fee of the 1% of the total loan amount. As FHA approved loan originators, we're definitely not saying to rule out this type of loan. In many cases, FHA is still the best option due to credit score or property types. The one key point that we're always consistently making here at the Mortgage Reel, it's all about education, and in this case, it's very strategic on the type of financing that you're going to choose based on your financial situation. Do you have any questions or would like more education in regards to the comparison of the two loans? Please contact us today for a clear and concise explanation at no cost. This is your Mortgage Rate Watch for Thursday, May 19th, and I'm Keith Akata with the Mortgage Reel. The ceiling of resistance, what we keep mentioning, is when you're looking at the bond page, how much lower interest rates or bonds can go from here. And when you're looking at it, right now we have peaked, it's started to sell off, and that's actually coming at the pressure increasing or putting pressures to increase interest rates. Now at this point, it does seem that interest rates have bottomed off to some of their lowest levels. If you go off of yesterday's sell-off, that's pretty much due to profit taking on the marketplace, and that's really not anything that came out as far as economic data. Today's economic data showed that jobless claims came in lower than market expectations, which is good news for the job sector, and that's actually coming to a little bit of pain today in the bond market, which may have pressures on interest rates later on this afternoon. Make sure to leave any comments, feedback, or questions below. We'll make sure from Team Mortgage Reel to get back and answer those as quickly as possible. We have a special request we'd like to make before you leave, and hopefully you've enjoyed today's clip. Make sure to check on the home page, click on the banner at How to Beat the Banks, and that'll take you directly to our Facebook fan page. We definitely put out more and more information and to create transparency in the financing process of home ownership. We're big advocates of home ownership, obviously, but we want to make sure it's as easy as possible to understand what's impacting and the education necessary for home ownership today. And when you're visiting us on Facebook, make sure to like us when you're there. Thanks for tuning in to your Mortgage Rate Watch. We'll be back with more news impacting your largest investment, your home.